Good night, everybody. It's Theunis here from South Africa, Western Cape in South Africa. Just sort of move this webcam away here. And yes, I really look forward to tonight's webinar. Like always, I just want to check: are you guys online? Can you hear me? Can you see me? Can you just react, please? Can you just say something in questions like yes, I can hear, I can see. You can see there's a couple of people. There's 9 people attending already. I don't know why, but people like to arrive late for these webinars. Because perhaps it's because they know that they can watch the recorded one later. All right. Heidi, Jeffrey, anybody? Can you hear me? Jezreel, familiar name there. Nkosana, can you guys hear me? If you can hear me, just post a yes or say something in the questions section so that I'm sure you guys can hear me. From my side, everything looks fine. The microphone is working. Jezreel says yes. Right, I assume if one can hear me, all can hear me. So I'm gonna go ahead. Right, this I've been looking forward to this webinar very much. The process of building a trader's mindset. You will notice, however, that the title changed. It was the 5 steps of becoming a successful trader, and the process that we follow. This is why I love the Forex guys, the Forex Time guys, is that when we have a presentation, we have to send it in for compliance. They check everything and they make sure there's no unrealistic things and the legal issues and so on. And they immediately said, when I posted initially when I posted the webinar title and everything, it's still the 5 steps. That compliance process was still in process, and they came back to me and said, no, but there's no guarantees. How can you guarantee that somebody will be successful? That's quite true. So I took that out, and they started saying all sorts of things. 5 steps is really 5 steps. It's not more a process. And then I went back and I thought, okay, let's think deep. What is the real root of this thing? Why is it so precious to me? Why is it so valuable in my mindset? And there I jumped. I realized what it is. It's actually a trader's mindset. It's a process that you go through and building a really the way a trader thinks, a mindset that is conducive to easily taking trades, staying in the flow of the market, if you want to put it that way. So this is what it's all about. And the reason why this is super special for me is personally, I was in an entertainment trap. It was a hobby for me for many years, and I was always frustrated because I knew it could work, but I didn't seem to. It was just before you, and you can't take hold of it. And I know a lot of guys are in the same situation. And I read in those years. I read a book about the mental processes and what happens inside a person's mind. How should you think? And one of those authors said that he considers 80% of trading is a mindset. It's different how you think about the market, how you react, how you train, how you practice. And 10% is method, and 10% is risk management. And then a couple of years after that, it's quite an old book. I don't remember the title and so on, but he wrote an article where he said now he changes his mind. He sees that, and he used to realize that 100% of trading has to do with your mind, the way you think. Because if that is not right, you can have the most simple and powerful method in the world and the best risk management, and it will still not work because it's a mental thing. It's the way you think, right? So this is why this is a special webinar for me. And I know I'm going to refer quite a lot of guys to this in the future as well. Right, let's go. First step, introduction or agenda. I'm going to have a short introduction, and then the first step, clueless. I'm sure everybody remembers that phase or that step. I clearly remember that when I opened my first account, and I obviously blew it very soon, but luckily it wasn't a lot of money. But anyway, we talk about that, a few things about that. And then step 2 is waking up, realizing, okay, this needs a little bit of more study. You need to know what you're doing. And then step 3, the aha moment. We'll speak about that. That is that happened to me a couple of years ago, and I still remember it clearly, vividly. I'll share a few things there with you. Then step 4, getting traction at last. You know what's happening, what needs to be done, and you can start doing it properly. And then step 5 is where we all want to end up, when it starts becoming automatic. When you've practiced it so many times that it almost becomes automatic. You open your computer, you see, you look, you know exactly what to look for, and then you know exactly what to do, and you just do it over and over and over. It's still exciting, but you've practiced it so many times. Yeah. Okay. And then a conclusion, a couple of things, and then questions and answers. Anywhere in between, you guys want to post an answer or post a question, make a comment, feel free to do so. Right. Introduction. Before I begin, one of the main purposes of this is to help not only guys that are new, but also guys that might have been like me, doing it for a hobby for many years or many months, and you feel something's missing. You just can't get a grip on this. Right. So the purpose of this is to help you to identify where you are. You are busy building. You're busy building a skill set, but busy building a mindset, starting to think like a trader. Right? It doesn't come automatic. Unfortunately, there's a couple of things we believe, especially regarding core things like losses and so on. Normally, losses is not a good thing. Now, in trading, losses can be an excellent thing if it's in the right context. You're protecting your account. So there's a lot of things that you're going to work through, and as you start thinking correctly, then it's going to start making a difference. And in the sense of it's the same with any skill that you get. If you want to become a doctor or a lawyer, you have to think like a lawyer, think like a doctor. They think different. They have to train to think like that to be able to have that skill, or to acquire that skill to be able to do that job. Now it's exactly the same for us, right? So let's continue. Your trading experience so far, I really want you to become personal. I really want you to be to get the most value out of this session that you possibly can. And if you have to watch it again, please do. Think. Our imaginations is a very, very powerful tool. You can actually time travel with your with your imagination. You can go back. You can see the trades you took. Why did you take them? The ones that worked. How did it work out? Why did it work out like that? What emotions do you experience when the trades didn't work out? This is an experience, or this is something you have to do. And I have a testimony of a lot of traders, experienced traders, that say they turnabout, or the turnaround in their trading came when they started looking back and learning from their mistakes. And normally the first thing you see, if you haven't been doing that, normally the first thing you see is about 80% of your mistakes is the same thing. It's the same category. Now, immediately you can just grasp what happens if you eliminate those. If you start eliminating those, then there's a drastic effect. That's a drastic effect on your trading. So that's a very valuable thing. So for this, I want you to really use your imaginations. Think back. What has your trading experience so far been? As we go through the different phases or steps, I want you to imagine, is that you or not? Hopefully you've progressed. But some of the new guys might still be stuck right in the beginning. So, and the warnings I'm going to give, the advice I'm going to give is going to help you. In fact, I'm gonna try and bump you up to the aha moment. Okay, so because that's where it really starts. So the less time you waste in the first 2 steps, the better. So I'm going to try to help you to get to the third step, and you should see why. Right. So let's continue. Okay. Knowledge. Warren Buffett said an interesting thing. He said that before you invest in anything, you should invest in your own knowledge. You should invest in what does he call it? He calls it your circle of competence. Because if you have knowledge about something, then it brings enlightenment, it brings insight, it brings wisdom, right? And the main thing about this is when you get knowledge, you recognize, you see risks that you previously didn't see, and that's a big reason why a lot of traders, but also businesses, because online trading is just a normal business, or it's just a business, a form of business. And why they fail is because they don't even know the risks that are involved. They found out afterwards, and then it's a painful experience. So by investing in your circle of competence, you are actually investing. It's a very, very good investment, right? You're saving yourself a lot of money, wasting of a lot of money and a lot of time. So, and I want you to do that. I don't want you to waste time. I don't want you to waste money, right? You don't have to blow accounts. I tell the guys always, if you do it correctly, if you follow the mastery process as I teach it, then it's almost impossible to blow an account. Really, guys, almost impossible. You have to really be good to blow an account. Okay, so and the guys that's been listening to my stuff will know what I mean. Right. Okay, so now we're talking about the mastery process. Just like we learn to talk, just like we learn to walk, just like when we learn a language, when we learn a new skill like driving a bicycle, driving a car, it's precisely the same process we're going to follow here. And I'm going to, like I said, I want to jump you up to the aha moment. And from there on, it's trying, learning, and growing. The biggest mistake people make is not trying. Because if you don't try anything, remember in the beginning when you try, like learning to walk or talk, you try carefully, you manage your risks well, but you have to do something. If you don't do something, then nothing will happen. And as you try and learn and grow, it's like steps that becomes that goes higher and higher and higher and higher and higher. And the more of a passion you have for something, the more you just want to continue learning and growing. At some things we stabilize. Let's say a guy that walks, he just walks. But then you get people that they experiment further and they can jump and they can make somersaults and all that sort of things. So that depends on you, right? And for traders, it's the same way. We're not all gonna have to become master traders, but if we can become proficient, then we can do this thing. This business will work until yes. If you continue, then you reach mastery. I've seen guys trade on very, very small time frames, thousands of hours of practice, and they effortlessly just do these things. Not everybody will reach there, but there's other options as well, higher time frames, and so on. Right, let's continue. All right, our first step is clueless. Now, I always say when you are unlucky in the first, when you start trading, when you're unlucky, listen very carefully. When you're unlucky, you have a couple of profitable trades. Really lucky. This is just that I can do a lot of money and you just blow it because it won't last. It can't last. Right? If you are lucky, then it can't last because you don't understand the language of the market. You don't know yet. You just started and you were lucky. You thought you were lucky, but you're actually unlucky, right? And then when you lose a lot of money, there's a lot of pain, and it's very difficult to recover from that. When you are lucky, okay, you have a couple of losing trades, and hopefully it's small, and then you realize, okay, I need to learn something. I need to spend some time getting knowledge and what is this about? Why did I lose? Why does it look so easy? And trading really is. It's simple, but it's not easy. And it's normally because we make it complicated. We overcomplicate it, right? So if you come back to the simplicity of it, and that's actually the truth with any skill. If you go back to the basics and you master the basics, then you can become good. But as soon as you stray from the basics, then it doesn't work anymore. And the problem with trading is figuring out what the basics are, right? So that's a very important thing. That's why I've got the seminars that we hold is about the foundation of online trading. The foundation, that's the basics. Right. Okay. So this many people ask me how long this lasts. Well, hopefully a couple of days, but normally a couple of days to a few weeks. Depends on how lucky or unlucky you are. Right. Then the second step is waking up. Now, let me just jump back there. The term that we use is unconsciously incompetent. That means you don't even know that you don't know, right? You don't even know that you don't know, but you very quickly find out if you have a couple of losing trades. So, and then the next step is waking up. And the term we use here is consciously incompetent. Now you know, you're conscious that you are incompetent. You don't know enough to make this work yet, right? So, and this is where the best thing you can do is to start studying. And unfortunately, this is also a trap. I talk about the entertainment trap. People think that the more they know about the market, the more indicators, the more theories they master, the better they will be able to manage their risk. This is not true. You can spend years, you can get a doctor's degree on some kind of indicator, but it will not necessarily help you, right? So, and we will come to this, the reason why. Now, unfortunately, a lot of people, they don't want even to study. So, or they study, but they study the wrong things. They don't make sure they get the basics of it first, right? But you do guys that try shortcuts, right? Now, shortcuts is when you think, and we all know that term, holy grail. Okay, so you think some method will make you rich, right? So you are not willing to spend time to learn, to study, like the first or the previous slide. You just want somebody else to make you rich. So you want you buy a robot, or you buy signals, or you buy a indicator, or you listen to a guru and you think this guy is going to make you rich. Now that doesn't work as well. So it's also a trap. You can actually spend years jumping from method to method to method to method. And one of the main reasons here is people think losses are bad. So you get a method and then you trade. And the reason I'm laughing, guys, is because I just recognize it. I mean, I've made all these mistakes. I think all mistakes in the book I've made 10, 100 times over in my journey before I discovered, before I had the aha moment. So, right. So in any trading strategy, losses is going to be part of your, it's going to be part of what happens to you. So you're just going to have to deal with it, right? And we'll speak a little bit about that when we get to the aha moment in the next step, right? Why that is so important and the mindset around that. Okay, so what you now need is you still need to study. You've realized that, but one of the main mental things we have here that's locking the guys in is unrealistic expectations, right? I found many times when I'm working with somebody and I ask the questions to see how solid their foundation is, then I find that they have based obviously on opinions they've had, people they've seen that are already masters, and sadly, brokers, marketers, and so on that promise instant riches with this business. They have this expectation of becoming rich very quickly, making a lot of money very quickly. Now I've got good news and I've got bad news. The good news is yes, it's possible, but the bad news is that you're gonna have to spend time. You're gonna have to study and master this thing. When you've mastered it, yes, but in that case, anything you master, any business or skill you master, will almost automatically cause you to make money. Now it's the same here. If you do your business properly, if you learn this online business, the skill properly, I call it the language of the market, understanding the underlying structure of the market, the core basics. If you practice that into your mental framework, strong, you make your mind strong, then yes, you will eventually make money. Like I said, but that's true. That's a business principle. So it's just it's not an exception. It's just normal for any business or any skill you get. Right. So let's see if I've covered all the points here. Yes. Okay. So the main problem is unrealistic. Now, how long does people spend in this phase? Unfortunately, can be from a couple of weeks, guys, to a couple of decades. Right. I know guys who've spent years, many years, 10, 20 years, and never discover it. And then just leave it and just say it doesn't work or whatever. Some guys spend a couple of weeks and they blow everything, and then they say, no, this can't work. And so it can really depend. And this is also the phase where most people drop out. Most guys either don't find the holy grail and don't find that one method that makes them rich. They never discover, or they never have the aha moment, and then they just obviously just drop out. And unfortunately, this is also where a lot of pain happens. You have losses, you're still associated with pain. You spend a lot of time, relationships get hurt. So if you recognize yourself, if you are still in this phase or the first phase, please, please, please listen very carefully to what I say. I want to help you. I really, really want to help you. Trading is one of the most amazing businesses. In most businesses, you have competition. You can't have 20 supermarkets in a small town. You can only have 4 or 5. At the moment it gets too many, then there's just not enough people to support that. And it's true for many businesses, but for this business, it's not true. In any market, the more people that are buying and selling in that market, the more liquidity there is, the more stability there is in the price structure. So any exchange, be it a stock exchange, a futures exchange, anybody, any trading platform, anyone wants a lot of people to buy and to sell there, and the more the better. Because they provide liquidity, they provide stability. The markets where there aren't a lot of people buying and selling, you have these spiky moves, and nobody likes that. So this is really a special business. So that is why, with the fourth industrial revolution, with the technology that's been thrown open, the banks, with Forex specifically, that's the main driver behind Forex, foreign exchange of currencies, is the bank safe. That's why they throw it up. That's why they invite people in. And subsidize the training and all these things. That's why the training with us is also free. We want you guys to come in. We want liquidity for the markets. It's a good thing. So, all right, that's very important. Now let's jump to the really exciting part. Okay, step 3, the aha moment. Right, and I love this. I love talking about this. This is when you realize a couple of things. All right, now I'm gonna go through here. I don't want to miss anything. All right, the first thing you realize is that no one knows what's going to happen, even 10 seconds in the future, not to say an hour or 10. Nobody can predict the future, just nobody. If somebody says or believes he can, then he's lying to himself. Now, the reason for that, and the reason why it's so important, is the mental pressure when you realize this just evaporates. You don't have to predict the price, guys. You don't have to predict it. You know how wonderful, how good the news that is. Right. All that pressure just goes off you, and you don't have to worry about that anymore. You realize nobody can predict the price. When you say you predict the price or you believe that, then what you're in actual fact saying is that you know every single person that's trading in this market. I mean, these are huge markets. $5 trillion a day it was last year. I don't know if it's more this year, but per day, hundreds of thousands of different big, small traders, companies, banks, whatever, involved for different reasons, hedging, buying, selling, whatever. You have to know every single one. You have to know what their strategy are. You have to know exactly when they're going to enter with the strategy. Obviously, that's impossible. So that's a very, very nice thing to realize. Okay, so nobody can predict the price, and we don't have to as well. Okay, and then what you realize is, hopefully you've, with your studies, you've looked at the price charts now, and then at some stage you realize that the indicators, the method's not going to make you rich, right? But you start seeing the structure of the market. I call it the structure of the market, the underlying structure of the market. Some guys call it the rhythm, the flow, even the flow of the market, that wavy structure that we can all see in the markets on every get the best. I'm going to challenge you. Open a chart. When you next open your MetaTrader 4, your chart, then go to a line chart, take all the indicators away, go to a line chart and zoom back a little. Not too far, because then you're looking at a higher time frame. Then you don't see the time frame, then you're on the structure. Just about as if you zoom out and you zoom three clicks in, then you should be able to see the underlying structure, the ebb and the flow of the time frame that you are in. And there's a structure in every single time frame. Now, that structure, guys, is the key. This is the key to this business, to the skill that you're developing, to understanding the language of the market. That is the construct of the language. So, and I still get goosebumps when I think about the moment I realized that. And then you also realize, if you start looking at that structure, you take all the noise away, you take all the clutter away, then you realize that if you take a calculated risk at the places where your risk potential, your risk compared to your profit potential, you've got a small risk compared to your potential profit. If you take a calculated risk there, then it's actually, you could make a net profit over a series of trades. You don't have to worry about each and every trade anymore, and you can visually test it. That's the nicest thing for me about the charts is it's visual. You can see that. You can see that waves. And what I'm teaching, I'm busy simplifying and simplifying, constantly simplifying, because the people that I work with, even in some of myself still, I realize there's clutter, and the clutter makes it complicated. The clutter is what causes that confusion to come over you when you get to the edge of the chart, that right edge there where the prices are moving up and down, when you have to take a decision, right? And when you're not sure and all that stuff. So it's easy when you look back, but if you can see that structure, and if you handle that properly, then later it gets easy to the right side, right? It's almost like a template that you practice into your brain. All right. Seeing that structure, you all know, you should know what is technical analysis. That is the skill that we are busy working with. Yes, it's looking at the price. Yes, it's looking market action actually. Yes, it's looking at a price chart, but why? Why are we looking at the price chart? Anybody who's listened to my stuff, you should know this. Right. It's because we are trying to identify the early stage of a new or the next trend. Right. That early stage is the key. And you can see it. You can see it. The market speaks. It shouts out. This is an area where you can take a calculated risk. Right. So you realize this. And you realize for the first time, for many guys, how critically important risk management is. This is one of the major things, or the last jigsaw puzzles or pieces that fell into place for me, how critically important risk management is. We're actually not even trying to make a profit, guys. We're just managing the risk. The market decides if we get a profit or not. We stop even worrying about that. We're worrying about the risk. We're taking in each and every trade. We are managing the risk. We're only risking a small portion of our account to make the mental pressure less on us. That's also one of the realizations. I don't care how good you are, when you trade with too large a portion of account, the mental pressure is just enormous. In the aha moment, we realize this. You're getting this information. The smaller you use, the easier it is to let it go and just see, and let it go and to let the market give you what it wants to give you. Sometimes it's going to give you a lot. Sometimes it's very generous, wants to give you a bonus. Sometimes not. Sometimes it's just going to turn around. Sometimes it just gives you a little bit. Right. So risk management means we take that into consideration. We manage our risk very, very soon. And the plus point of that is our mental risk, or our mental pressure is then off, and that's the point when you realize, when you get to that trading becomes easy. You haven't got that stress, that enormous mental pressure anymore when you take a trade. You see this opportunity developing, you take it and you manage it. So, and then you're looking for the next one. So that's when you're thinking about the right things, or realize these things, right? That's also the stage where you realize how critical it is to review your the old trades, especially the trades where you had losing streaks, losing streaks, and so on. Because previously you thought about this as mistakes. Yes, and it was at the time mistakes. But when you go back there and you look and you use your imagination, you remember how you felt, then you're actually making it valuable because you're learning from it. And remember the mastery process. We try, yes. It's not going to work every time, but we learn and we grow. Anything, any place, anything we've tried in this, if we learn and grow, we make it valuable. So you start making your mistakes, or the bad trades you took where you didn't follow the plans, and you start making them valuable by learning from them. And as you look at them in your mind, a lot of things are happening. A lot of neurological pathways are being formed. And just at this point, I'd like to speak about losses. A good trade and a bad trade. A good trade is when you followed your plan. You looked at the structure of the market, initial stage of an next trend. That's where you took your trade. You knew exactly where your entry was. You have a simple, well-defined method. You did risk management. You put a stop loss. You protected your account. That's very, very important. Stop loss is actually, if you want to think about it, it's a place where you protect your account. Don't make it negative. You want to associate protecting your account, the losses associated with protecting your account. You want to make that a positive thing, because protecting your account is very positive. I'll tell you a quick story, and I'll tell you why. I had a call from a person, an account manager, the other day. He said, "Theunis, please help. I've got a client, a big client, and he's in a flat spin." All right. And I said, "Okay, I'll help." And I talked to the guy, and I asked, I said, "Sir, what's going on?" He said, "I don't know what to do. I don't know what to do. I don't know what to do." He was totally stressed out. After a while, he told me with his story, and he started with a small account. He actually tenfolded that account in about 5-6 months. So that means he had some skill. And then mentally something went wrong. He decided that he knows this, he can do this. And then he stopped using stop losses, and he thought, no, he now can predict the market very well. And at the point that we were talking, he had open losses of over 90% of his account. So he was totally freaked out. And you do not want this ever to happen to you. All the effort of the months and months of trading well, protecting his account, and then just deciding, I know this, I can predict the market. I'm not gonna, I'm gonna become rich very quick. And 90% open loss of his account. He said, "Theunis, I don't know what to do." Well, I told him, "Sir, do you want to protect the 10% that is still left? Do you want that to be in your account at the end of the day?" He said, "Yes, obviously." I said, "Then you'll have to start stopping, closing those positions." And in the actual fact, in the end, he closed about 70% of the losses, and it was because he started to understand what I'm saying about protecting your account. He could actually do it. Before we spoke, before he understood, he just couldn't do it. He couldn't pull the trigger. He couldn't get out of those trades because he was so mentally locked at this association with losses are bad. Losses are not bad, guys. If it's in a good sense, if you're protecting your account, if you had a plan, this is an initial stage of a new downtrend, and you risk a small calculated amount, and it doesn't do what it says, and it starts spiking up, then you want to protect your account. It's a good thing. You can celebrate after that good loss, after that loss, because it's part of a good trade. Same thing if you take your profits. You take profits, high probability the market will go down a short while. You start managing your risk by taking some of the profits off. Not everything, because sometimes the market wants to reward you a lot, but you take the mental pressure off. And then anyway, so that's discussed in more detail in other webinars and so on. But anyway, so he realized he was, and in the end, I think he saved about 10 or 15% of his account. So, and now he's doing it properly. Now he doesn't want that to happen again. So, so that's why I say this is very, very important. These associations, these things you think about, right? And a bad trade. Again, I just want to spend some time on the whole concept of a good trade and a bad trade. This is a very, very important aspect of the aha moment, the step 3, the realization. A good trade, like I said, is when you did your plan, you listened to the market speak to you, this initial stage of the next trend, you followed your method, you followed your risk management to the dot. So a good trade has got nothing to do with a loss or a profit. It's got to do with, did you follow your plan? Did you do everything as you trained it over and over and over again? Right? And a bad trade, on the other hand, also has no association with a loss or a profit. It's, did you follow your plan or not? If you didn't, if you impulsively jumped into the market at another place, then I don't care if you made a profit or loss, it's a bad trade. Continue with bad trades and it wipes your accounts all the time, or it stops you from making profit anyway. And so if you didn't listen, if you didn't listen, follow your method, if you didn't follow your risk management, one of the things I remember I struggled with a long time is when I am in a trade that is going in my way, because I wanted, actually, I wanted a lot of profit with each and every trade. We call it a low probability money management or risk management. So the trade goes in the direction, yes, you've got profit, but your mental stress is enormous because is it going to last? Is it not? Isn't the market going to spike back now or not? I don't know if you guys can remember that or still have that. That is totally not necessary, guys. That is not necessary. Not necessary. Okay. So a low probability risk management causes that kind of a pressure. Stay away from it. Go to high probability risk management where we use, for example, the Fibonacci extensions. Take a sum of your profit off early on when the market gives it to you. Make the pressure less, and then it's easy to let the trade go and to get a lot of moves when the market gives you a lot. Other times it turns around and because it's a break even or a small loss, it doesn't affect you so much. And it's also easy to be consistent and to repeat it over and over and over, and that's what you need. So you don't want randomness, you want consistency. All right, so yeah, I can say a lot in this step. I love it. I remember all the feelings. How long does this last? Well, this can last a couple of days to a couple of weeks. So normally, the moment you have these things, you start flowing immediately into step 4. So let's flow into step 4. Okay, yeah, this is something I want to show you. This is when I talk about the structure of the market, the underlying structure of the market through the rhythm and the flow. And this is a very important thing that I showed to most of my guys, especially the new people and the guys who are stuck. Yes, you have to know MetaTrader, you have to know your tools, but you don't have to be an expert in it. In the beginning, I've actually optimized this. I've made it a line chart, so it's even easier to see the higher tops and the higher bottoms. But that's the structure you want to see in the market. You zoom back, no clutter, make it as simple as possible. You just see the structure, the ebb and the flow of the market. Mark Douglas in the book Trading in the Zone, he talks about the now opportunity flow of the market. That's what traders do. They stay in that now opportunity flow of the market in this rhythm. But the market goes up, it starts changing. There is an initial stage of a next trend. You can see this, guys. You don't have to guess. You don't have to wonder. And as you practice this on the old charts, in the old charts, well, I mean, the old charts is just the historical charts. As you practice to see this, like a imprint or a template starts forming in your brain. And the stronger that is, the easier it gets when you get to this point. For instance, when you're this point, what is it? It's very, very easy. There's still a downtrend in progress. It's only when it breaks through and pulls back. And this is the things I train with when we do Skype sessions and so on, to get the guys going, because to get them back to the bare basics, make it strong. Get rid of the clutter, and then you start practicing. Slowly you start practicing and it picks up momentum, right? So now aha moment, yeah, you realize you don't need a lot of indicators to be able to see this. And when you can see this, guys, then there's hope. Then there's hope. Then not every change overnight, every initial stage of a next trend will give you a good opportunity. Like there's a lot of sharp candles or large candles, but many of them do, and we look for the easy ones. We make it easy for ourselves. In the beginning, I remember when I was sitting with more experienced traders, and I was looking, and it looked so effortless, and I couldn't believe it. I mean, this guy is trading with huge amounts of money. I didn't realize at that stage they were only trading with small percentages or small percentages of their trading capital, but which of course takes the mental pressure away. And it's just so effortless. I mean, they see this and they take it or not. There's just no effort involved, and this is where this starts. This is the bare basics of what technical analysis, the early stages of a next trend. Right, okay, now we go into step 4. See, the time is still going good. Let me at this stage, before we go on, I want to look at a few questions here. Yes, there's people that's asking, can we watch the webinar later? Before I finish, I'll just put my email back on, and then you can send me an email, please, and then I'll send you the link to this. This is recorded in we use it went out of my mind. but they use a program for this, and they save it for up to a couple of months there, then you can watch it. Some of them are put on the website, the FXTM website, not all of them. But yes, for a couple of months you'll be able to. If you email me, I'll send you the link so you can watch this. Okay. Can you predict the daily trading direction? Okay, let's go one back. I love this question. Guys, if this is a daily chart, can we predict the daily direction? Right, if this was an uptrend and this was the initial stage of a downtrend, predict, we listen to the market. The market is speaking. The structure is telling us this is the possible beginning of a new downtrend. Right, there it was. It's not always. That's why we have to manage our risk. So can we predict? I don't like the word predict. Predict makes us think, yes, we know it's going to happen. And when your brain thinks, that's the way our brains work, our neuroscience works, is if you believe you know what's going to happen, then your brain blocks a lot of information because you know now. You don't have to worry anymore. But the problem is, with the market, you never know. And that's part of the aha moment. You realize you never know. We don't try to predict even the market. Christian. Right. We don't even try to predict the market. We do what the market is saying. The market is saying here it's a possible early stage of a next trend. We take a calculated risk, depending obviously on the method that we use. Right. So there's no reason to try and predict the market. Right. Let's look at the other few. What is risk management? Abdul asked, what is risk management? Account management is the difference between. Okay, account management is just, I think, how you manage your account, how much money you put in there or not. Risk management is how much, is two actions, really, in my opinion, anyway, there's two components to risk management. Risk management is the most important one is how much of your capital are you risking with each and every trade. You have to do lot sizing, you have to decide how much you're risking. You can't just open-endedly start trading, because then you might have a couple of nice wins, and then you have one loss and you're wiped, or all the profits are wiped. So you have to carefully risk only a portion of your trade. I know most guys 1, 2, 3 max percentage of their account they risk on a trade. Right, and the second part is taking profits. Right, the first is protecting your account when the market doesn't do what it told you to do, or when it's early stage of next trend and then it goes into a ranging market or whatever. The second part is taking profits. Taking profits is actually also risk management, because there's a high probability the market will go a little way in your direction. And then if you start taking small profit there or a partial profit there, then you actually managing the risk, taking the mental pressure off, and it's easy then to let the market give you what it wants to give you until you see the early stage of a next trend. Right, so risk management is that two components. It doesn't need to be very complicated. You don't need a master's degree on that, so that's what it's all about. Okay, what time must be used to see the structure? Right, in Kusana, you can see that structure on every single time frame. The higher time frames, the structure is a little bit more stable because there's more people involved in each of these candles when forming the structure. On the lower time frames, from the 1 hour down, there's less people involved in forming these candlesticks, and the result is there's more noise, there's more emotion. A person or if a firm comes in with a very large order in a small time frame, then it makes a large candle, makes spiky candles and so on. So both have got it. It's not, one is not good and the one is bad. They've got advantages and disadvantages. The advantages of the higher time frame is the structure is better, the structure is more stable, like you can see over the 4 hours in the Euro USD. But the disadvantages is there's not a lot of options, not a lot of opportunities to trade. Right, the lower time frames, on the other hand, has a lot of noise. That's a disadvantage. But if you practice and you practice and you practice really hard, and you've got a very simple method, then there's more advantages for you. So that's why as the guys get good, as they become master traders, then they normally go to the lower time frames because there's more opportunities there. Right, let's move on. I think I've covered all the questions. Yes. Right. Then it's step 4, right? So you've all had all these realizations. What now? Okay. And one of the most important things, and this is where the foundation of trading comes in, of online trading, is you understand now that you're not predicting the market anymore. This is about a language that you learn, a language with a structure and a rhythm and a flow, right? So, and you've got to know this language. You've got to get to know this language. Now, this is a very, very important slide here. Success is not always what you see. Now, this has got nothing to do, guys, nothing with money, nothing with making money. What you see here is 2 little rabbits here. This guy thinks he's got a huge plant. It looks like it's doing very well, but his root system is not well developed. That's not going to last. That is absolutely not going to last. It may look like you're doing well for a some guys are doing well, but their root system is the key. This little guy looks like it's not he's not got a lot of results, but his root system is solid, and I can promise you that thing is going to keep on growing for a very long time. It's going to become very good because it's got sustaining power. Now, that's exactly what you're going to do. You're going to give yourself, in this step, you're going to give yourself traction, right? So what I mean with traction is you're going to look for a simple, well, you're going to start, first you're going to practice, just put it on a line chart, start seeing that structure in the market. Spend time seeing that structure, just marking the uptrends and the downtrends with trend lines, seeing that, imprinting that into your brain, because that is the key. Those areas, those initial stages of the next trend, when a trend breaks and starts making waves in the new direction, that early stage of the next trend, that is the key. That is one of the keys. That's where we trade. We don't trade anywhere else, especially not in the beginning. When you become a master, yes, obviously all sorts of other opportunities within time frames using fractals, patterns within patterns will open up for you, but not in the beginning. In the beginning, you have to take it slow. You have to build that brain template first. So you take it slow. You spend lots of time seeing that structure, even drawing it on a page, drawing a proper uptrend down. This is how a crossover looks, and then you see, yes, it looks exactly the same in the markets on that chart. Don't complicate it. Drill that simplicity of the language, that construct of the language, drill it into your brain by repeating, practicing. That's what I mean with this root system here. And then the next step is it's all part of the foundation. You guys will recognize it. And then you need a simple, well-defined system. It's simple, so it doesn't confuse you. You don't want to lose track of the price there. That market structure, that early stage of the next trend, that's what you want to see, right? And the method must just help you to find the entry place. You get lots of different methods. We've got a couple that we teach, so that is up to you, right? But the simpler, the better, and well defined. So you don't wonder. You don't guess. You must know, guys. You must know. That is one of the things that I remember. When I sat in the beginning, when I started trading, when I sat with the more competent guys and I saw them making a profit over a series of trades, they knew what to do. They've experimented, they've tested, they know. When they're trading live, they're trading with big accounts, they know what to do. They're not guessing anymore. They know, right? And then obviously the next step is what we discussed, the high probability risk management, money management, right? So that is taking some profits early on so that you can relax, so there's no mental pressure. This is the root system, and you practice that over and over and over and over. And what happens is that's why I also recommend reading books like Mark Douglas's Trading in the Zone. Is lots of things are going to pop up in this stage. Yes, you're going to start making a profit, you're going to stabilize, but there's a lot of mental issues, they call it activated beliefs, that going to pop up. For instance, that a loss is bad. You're going to have to learn that the loss is not bad. And the way you learn that is you look back and you see over a series of trades, yes, I can make a net profit. And you realize that by protecting your account, by taking that small loss, it's a good thing. And as you repeat that, then that the sense of pain, the belief that the loss is actually bad or it's painful, just fades away, right? You are charging almost the new belief that a loss within a good trade is a good thing. So you're charging that. This whole thing about predicting the market. As you're repeating this, you realize you don't have to predict the market. You never have to worry about that again. The market gives you a hint. It speaks to you. The initial stage of an next trend, technical analysis, and you take a calculated risk. That's it. Sometimes it's not. It's gonna not gonna work, and you can protect your account. Sometimes not. But the reasoning behind it, you understand. You see that structure. So there's no stress there anymore as well. Okay, so that's the type of things that pop up. There's a couple of them, and if you do like to invest in books at this stage, please invest in that, or this is a suggestion anyway, is invest in that Trading in the Zone, Mark Douglas. There's actually a couple of those type of books that talks about the mental framework and about what our traders think. So you can choose. These days, what is nice is you can look at you can have a preview of how they are, and choose one that speaks to you. That obviously that you understand. Not every writer, not everyone likes or understands the way every writer writes, but get one that talks about this whole thing, the way traders thinks. That's going to help you the most in this phase. This is going to give you traction. And as you work all those contradictory beliefs out of your system, it becomes easier. For instance, in this book, the Zone, there's an exercise at the end where it says, when you do this exercise of 20 trades in a row, then obviously on a demo or with a small amount testing, you're seeing where's the contradictory beliefs, where's the things that are still hindering you, that's causing the stress. And as you work them out of your system, then it becomes more effortless, more easy. And that's where we want to get. That's the direction we want to get. Right. And I've already started actually jumping. Yeah, this is very, very important. Part of the traction, this is just what I described. Right. So what people see, when I looked at those successful traders, I saw, yeah, these guys are making lots of money. What I did not see is the years or the months before that, where they dedicatedly worked. They had work. They built these things in. They made mistakes. They tried. They grew. They learned and they grew. They had disappointments. They had times when they thought, I'm going to never make this. They sacrificed. They had failures, but they learned from their failures. They just persisted. And then when I saw was when they had those skills already. And it's like that with any skill, any career, anything where you have to learn things. We see what the guys that look successful, but if we find out, we talk to them, we read the books about them, we see they did have years, months, years, or whatever, normally years of hard work and doing that thing. So you cannot shortcut this. With the proper guidance, with mentorship, that's what we're trying to do here, is to help you guys. You don't have to make it. It doesn't have to be longer than it should be, right? So if you put effort into this and you make progress, and you do it the right way, then it doesn't have to be decades. It can be years or months, depend on your skill and your passion and those type of things, right? And this is what we also call the consciously competent. So now you're becoming competent, but you know it. You still have to focus, right? And at some stage, as you keep on practicing and keep on practicing, and especially this, you realize you're focusing on the development of a skill. You really forget about the money in this stage. So you know when you've got the skill, the money will come. So you forget about the money and focus on the skill so you can get it done. Okay, that is very important. And what happens then is you start seeing good setups, go through the mastery process first in the old charts, historical charts, and then on the you practice your executions on the demo, and then you go to a small account. I love the cents account because it's real money, but it's cents, so the pressure is not high. You can still build that building that mental framework, making your mind strong in this, and you can slowly push it up. All right, that is the process that you go through. Okay, how long does this take? A couple of weeks to a couple of months, depending on how much time you've got, how much desire you've got to do this thing. It can take a long time if you haven't got time, or you get distracted the whole time. But normally it takes a couple of weeks to a couple of months, right? Okay, and then we get to the very, very exciting part, right? Now, we call this the automatic part. We call this the unconsciously competent. Now, a good example that I use often is that when you start driving a car, you get a car, you don't know where the gears are, you don't know where the pedals are and stuff. You have to practice. Slowly, you practice in your backyard or on back roads and parking lots. But as you practice, as you practice, as you practice, as you practice, then it becomes easier and easier and easier. That neurological pathways lays down, becomes neurological networks, thick networks, and you move into this stage. So from the previous stage where we had to concentrate, now you've done it so many times, it starts happening automatically. Your rhythm, your schedule. I know a lot of guys like to trade, especially when they trade the lower time frames. The longer time frames you can trade, obviously, 1 day, 4 hours. There's long spaces in between. Even guys that are working can do that. But the shorter time frames, normally the guys trade the first few hours of the London Open. In South Africa, that's about from 9 o'clock till about 11, 12. Right, because in the lower time frames, there's a lot of liquidity, a lot of people buying and selling there, looking there for trends. So that's sorted out. You've tested it. You've tried it. You know which ones works for you, which pairs work for you, which not. You've dropped the ones that don't, trend nicely. You keep the ones that you've tested that work, and you just do it over and over and over again. There's also the other session we like in South Africa, the New York session from about 3:30, 4 o'clock until 5, 6. It's also in our working time almost. So we've got actually 2 sessions if you trade the lower time frames. You just have to take a rest in between because that type of trading is very intense, very tiring on your brain. I know a lot of guys, if they do trade both sessions, they take a power nap or something to almost like reset. Right, so unconsciously competent, you know what to do. You've taken the time, you've worked out your routine. In the mornings, you come, sit in your computer, you check the rhythm, what's going on, and in a couple of seconds, you can see on the chart, is there opportunity or not? If there's not, no over trading, why? The language speaks, you understand the language now. There's no reason to overtrade. You wait for the market to speak to you. You take a calculated risk when that structure, when it's initial stage of a next trend. It's like the river that's flowing here. It just flows. It's effortless. It's unforced. It's not effortless. You obviously have to make an effort to sit there and so on, but it's unforced. It just flows, guys. And this is then where you start making a net profit over a series of trades continuously, and you start building up your account. The guys that start with almost nothing, we've got up in Africa, Nigeria, we've got guys that start there, they have nothing. They're living on the streets. They actually, this is in South Africa as well. Another guy that I know of, and he went to a place where they taught him the skill. So he had nothing. So he saved up. He opened this 10 dollar cents account. So that's not a lot. So he slowly traded it up. So you get into that rhythm, you trade your account slowly starts growing. Obviously, if you have more capital, then you can slowly put in more as you build up your skill, but you're focusing on your skill now. It flows now. You keep the mental pressure low. You know the language. You take your calculated risk and you build your account. And this is then months, years, doesn't matter, but you are slowly building your account. It depends on your passion. Do you want a full time? Don't you want to do it full time? But this is a very, very nice stage to get in, but it takes work. Let me just check. You wait patiently, you scan for good trades, you take them if they come. There's no pressure. You don't worry, you don't predict the market. You know precisely where to enter to protect your market, where to take your profits in stages, high probability. I can't stress that enough, guys. High probability risk management or money management. Your equity curve starts growing. You can see a lot of our strategy managers and Forex Time Invest. You can see that equity curve growing. You can see this guy knows what he's doing. Yes, he's taking calculated risks. Yes, you've got drawdowns, but you're managing it, right? And your insight grows, and you're learning. And it's ironic that that most guys I know, me myself, I review the trades that didn't work out just to see if there's not something popping up, something I can learn that's going to make it better. You still stay teachable. You talk to other people, and it's like because you don't believe, or you don't believe you know what the market's going to do. Because you're relaxed, your brain doesn't close up. You're open, and you look at that, and you actually start seeing other opportunities that you normally would not see, just because you're relaxed. And it's really, and the duration the guys ask, and I say until the end of days. the gentleman, I see we're almost on our time. The gentleman, okay, I'm just gonna finish here before I tell my last story. I see we are almost on our time. Is that the conclusion? What I basically want to end off is guys, if you feel you've been doing this for a long time and there's no hope, there is hope. If you understand what I told you here, you have patience and diligence. You treat this as almost like a diploma in applied economics. You take the time, you study, you do it right, you get rid of all the clutter, then it can work, right? So if you don't believe me, contact me. We can speak more about that. I'm just gonna go quickly to my to the first one so the guys can see my there's my email. If you want to email, I see some people have asked for my email. Just a last story before I finish. That old gentleman that I talked to, while I was still busy in a hobby and in a hobby mode, trapped in the entertainment trap, and I met that old gentleman, and I realized that he's doing this, almost effortlessly. And I talked to him, and he told me, Theunis, your foundation is not right. And he warned me. He said, take it easy, patience and diligence. Don't try to force it. As you get your root system right, as you figure out all these things and you practice it, it starts, it becomes automatic almost. And I was looking at him, he was trading with absolutely huge amounts in my eyes. And he told me, he said, don't look at that. It's still a small portion of my account. The basics with me is still right. And I think the bottom line I want to get to is this guy, when I met him, he was almost in his 90s. He told me, Theunis, I'm in an old age home. I'm with my wife. I see people dying around me of boredom. Old people waiting for death to come. He said, when I'm bored, I just open my charts. I don't need the money anymore. I trade because I love to. If I make extra bit of money, then I give to my grandchildren, or I see opportunity to help people or give organizations. It's a skill that you're going to do for the rest of your life. You can bless people with it, bless obviously yourself and your family with a good living and so on. And it's not about for some reason I think we look at too many movies or something. Everybody wants to become a multimillionaire or billionaire. That's not it. Keep your overheads low, especially in the beginning, and live a normal life. It's not as romantic, I think, as they make it out also. And I don't know. It's just this is such a valuable skill. And I've said it to a lot of guys. All of us wants to retire one day. So we all anyway long-term traders because we're building a retirement portfolio. So and with this skill you can optimize that. It gets much easier because you've got that skill to build a portfolio like that. So with lots of instruments and so on. So if you've got questions surrounding that, then please contact me and we talk. This is really a valuable skill to do. Like I said, all of us does it. And a last thing I want to end off is we all know in the markets, but it's true again for every single business. You've got the greed factor and you've got the fear factor. The greed factor makes people want to get too much money too quick. They take unnecessary risks and they get hurt. The fear factor neutralizes people. They don't want to do anything. They don't even try. Then they cannot learn and grow. There is a middle way. If you know the truth, if you get the knowledge, and you get that light goes on, then there is a way to with very low risk to acquire the skill, and we want to help you guys with that. Right. Let's quickly see. I see a couple of comments here. Yes, you can see my email. I put that on. Guys are saying thank you. Thank you for listening. It's a privilege to help you guys. Some other questions here as well. Yes, and in the end, I think what happens is you slowly build confidence, and it's nice when you have a skill that something you can do. And I've also said I'm going to offer this that you can you're not going to only help yourself. You can help your family. You can even help people that you don't know yet, like the old gentleman that helped me to fix my foundation, and it makes a big difference in my life. And I can do it to other people, and you can start doing that for other people as well. So this is really something something special. Okay, thanks for listening, and contact me if you want, and we speak further, or else we see each other again with the next webinar. Okay, goodbye, good night, and have a nice weekend.